All right, welcome back. Day 16 of our 50-day journey. And today, we are tackling a big one. It's probably the most frustrating question every single new investor asks. Why on earth is my stock falling when the market is clearly going up?
So you pull up your trading app, right? You see it right there. The Nifty is in the green. It's looking good. Maybe it's up a whole %. You're thinking, yes, today's gonna be a good day.
And then you tap over to your portfolio. And that one stock, the one you did all the research on, the one you were so sure about, it's bleeding red. Down 4%, 5%, and you're just staring at your phone completely baffled.
How is that even possible? Seriously. This right here, this is the moment where most beginners get completely thrown off. You start to panic a little, thinking you must have made a terrible mistake. But listen, I'm here to tell you, you probably haven't done anything wrong. So yesterday we talked about gaps, right? How the market can just jump before you even get a chance to react. Well, today we're going to peel back another layer. And the key idea for today is this. Money doesn't move everywhere at once. It's not some giant wave that lifts every single boat. Think of it more like a powerful river that changes its course.
Okay, so the first big concept we have to get our heads around is that the market isn't just one single thing. It's actually a collection of different sectors.
And what are these sectors? Well, you've got the big ones, right? You've got IT with giants like Infosys and TCS. You've got banking and finance, HDFC, ICICI. Then there's FMCG, everyday stuff from HUL and Nestle, plus auto, pharma, energy, metals, the list goes on. The Nifty, that's just an average of the big players from all these groups. So you can have a day where the Nifty looks totally flat, but underneath that calm surface, IT might be soaring while banking is taking a nosedive. And here is the absolute key to understanding everything we're talking about today. Money flows between these sectors. It's not locked in one place. It's constantly on the move, searching for the next big opportunity.
This constant movement actually has a name. It's called sector rotation. Remember back on day 7 we talked about the whales of the market? The big FIIs and institutional investors? Well, this is their playground. They're the ones moving massive amounts of cash out of one sector and parking it in another, all the time. So why does the money move? Is it just random? Absolutely not. It's all about the economy. These big players aren't just guessing. They're making very calculated decisions based on what's happening in the broader economy.
And this right here, this is basically the cheat sheet for how big investors think. For example, if interest rates are on the rise, where does the smart money go? Into banking and financials, because they stand to benefit. If there's a lot of fear and uncertainty, investors get defensive. They move their money into FMCG and pharma, because hey, no matter how bad the economy gets, people still need to buy soap and medicine, right? It's a predictable dance if you just know the steps.
Okay, so that's the theory. But let's bring it back to you. Let's look at the bigger picture and see how this all directly affects that one stock in your portfolio.
All right, let's play out a scenario. Imagine you own a fantastic IT stock, something like TCS. The company's fundamentals are solid and they just posted amazing quarterly results. Everything looks perfect. Logically, that stock should be going up, right?
But then you look at the chart and it's down 8%. You're just staring at it, pulling your hair out thinking, wait, what? The company's doing great. What is going on?
Well, here's what might be happening behind the scenes. Maybe some bad economic news just came out of the US, which is a huge market for Indian IT companies. Suddenly, all those big investors, the whales, they get nervous. They decide, you know what? Let's pull money out of the entire IT sector for a while and move it somewhere else, like banking.
And this is the big takeaway. Your stock isn't falling because it's a bad company. It's falling simply because money is leaving the entire space. It's like the tide going out. It doesn't matter how great your boat is, if the water level drops, all the boats go down with it.
And this brings us to what I call the beginner's blind spot. It's when you focus only on the stock, but you completely ignore the sector it's in. It's like buying a beautiful house without checking out the neighborhood first.
This is the classic mistake. Step 1, you find a great stock. Step 2, you completely ignore its sector. And step 3, you sit there for months wondering why your awesome stock is just not moving. Sound familiar?
So, from now on, I want you to make a mental shift. This is so important. Stop asking, is the market going up? Instead, start asking the smarter question, where is the money going?
This means you have a new checklist. It's super simple. Step 1, 100% check the stock. Do your research. But now there's a step 2. You also have to check its sector. Is money flowing in right now, or is it flowing out? Because listen, being in the right stock is great, but it's not enough. You also have to be in the right sector at the right time.
And this idea totally changes how you should look at your portfolio. Check this out. On one side, you might think owning 5 different banking stocks is diversified, but it's not. That's just a huge concentrated bet on one single sector. If the banking sector has a bad month, your whole portfolio suffers. True diversification is what you see on the other side, a mix of stocks from totally different sectors that will react differently to what the economy throws at them.
So let me ask you this, and be honest. Have you ever held a stock that you knew was good, but it did absolutely nothing for months, while everything else in the market seemed to be flying? If you're nodding your head right now, yep, that was probably sector rotation working against you.
Look, just understanding this one concept puts you miles ahead of most new investors. And tomorrow, we're going to tackle another huge illusion, why the market often does the exact opposite of what the news tells you it should. You don't want to miss that one. I'll see you for day 17.